Okay. All right, Vinny, thanks so much for stopping by and giving us your quick take on the markets as well as individual stocks that we discussed. Look forward to having a chat with you rather soon. But let's focus on the cement space. Stocks have been gaining in trade in the last couple of days or so. Reports indicate that some companies have gone ahead and increased prices by around 5 to around 15 rupees all across the country. Mr. Rajnish Kapur, the COO of JK Cement, joins us on the show. Hi, Mr. Kapur. Thanks so much for joining in. Well, you predominantly operate in North, some parts of West as well as South markets. Could you tell us, has there been a price increase? If yes, could you break it up geography-wise?
Yeah, good morning. So primarily, yes, there has been an attempt of price increase, and we can say that in North, we see about 10 rupees of price increase has been taken. But when we look at an average kind of a thing, by the time this month ends, I think we will be looking at about 7 rupees, 7 odd rupees of price increase in North. That is, I'm talking per bag price increase. And in South, I think it is slightly more, maybe around 10 rupees price increase can be seen in South as the month averages out.
Okay, so you're saying that in North, 10 is being pushed through, but you think 7 will get absorbed, right?
See, what has happened is that we have taken a price increase of about 10 rupees has been taken, but since it is only happening towards the end of this month, an average impact in the month of Feb you can expect is in the region of 5 to 6 rupees.
Got it. I just wanted to ask you, sir, there is both the Adani Group companies, that's ACC and Ambuja Cements. They were not selling in Himachal Pradesh. Their units were shut. Do you have any exposure in Himachal Pradesh?
So we don't have any no exposure in Himachal per se. It's quite far from our plants. So we didn't get much impacted by that. But of course, some of the other markets in Punjab and all, they do come, but it's primarily Himachal is the market where they were which was impacted by Adani Group not operating.
Mr. Kapur, the reason I ask you this is the fear is they'll start ramping up capacity and they'll start supplying in the neighboring regions as well, and that could put pressure on prices, in other parts. Do you believe that that will hold, or do you believe that no, demand is strong enough, so these price increase will be absorbed even if ACC and Ambuja ramp up?
No, I'm not much worried about that. Primarily, I think because I don't know what Adani has done, but if I was in their place, I would have ensured that the markets where they were losing because of Himachal plants getting closed, they would still supply to those markets even at a higher logistics cost. So it's a big, ACC Ambuja is a big company and they have multiple plants. So, and also March is the right month, February, March is the peak months where we expect growth to be substantial. And therefore, I don't expect any major impact, coming because of their plants getting operational. Yeah.
All right, so you're not too worried about competition. Since you said that February, March is the major months when demand comes through, I think in the last time we spoke to you as well, you said that there is a lot of pre-election demand that's kicking in. Earlier, there was government capex. Now, private capex is also picking up. And you have, the rural market coming back. What does all of this mean in terms of volumes for you? What can you clock in by the end of the year and in FY24? And in general, what's the trend looking like?
So for us as a company, I think we are looking at over 20% growth in volumes. I'm talking of grey business. We should be clocking close to 14 million tons in this year. And next year also, we are very positive. And I think we should get about 2 million tons of growth in next year, primarily because we have got 2 more operational plants. We've got an integrated plant in Panna and a grinding unit of Hamirpur, from where we have started getting very good traction. So that I'm talking per se for JK. But when we even look at, industry and we look at FY24, the current, increased allocation by the government in the current budget for, for roads and highways and for urban, development, things like that. All NHAI and MORTH both have got substantial increase. So we expect a lot of growth coming from there. In rural also, we have seen that PMAY Grameen has seen an increased allocation even as late as November 22. And there is still an headroom for number of houses that need to be made in rural. So I'm quite confident that in the coming year from now and to the FY24, rural and infra would really push it. Industrial is not going to lag behind because there are a number of, manufacturing operations who are trying to come into balance out the performance-linked incentive schemes and other things. Yes. So overall, I feel that next year we should see close to 8% growth.
Okay. Sorry, you said 14 million tons, 14 million tons this year. That's FY23, right?
I'm talking of JK, yeah.
Yeah, and you said 2 million tons next year, growth.
Yeah, approximately around that region.
That's about 14-15% in FY24.
Yeah, absolutely, absolutely.
Okay, okay. Is there, by the way, just to understand, is there a election impact? Have you seen that? Because lots of state elections this year, next year, general elections. Analysts say, well, that's a good thing for spending overall, and cement perhaps also benefits. Is there any historical evidence to support this, both in terms of volume, offtake, and pricing?
Volume offtake, yes. So we have seen that over in the past elections, when we go back to the past general elections as well as state elections, we have seen that there is a tendency of, more, a lot of projects which, can be pushed to complete. So those kind of things have happened. And therefore, we are anticipating a fairly decent growth in the year of FY24. Price, of course, depends on number of other aspects in terms of, how's the demand supply gap. Generally, if the demand is good, price should go up. But then there are various competing factors. So therefore, one can't very accurately predict that the price is going to go up. But certainly, volume increase is really anticipated. However, we see a bit of a cooling off in terms of the input fuel cost and other things. And therefore, even if there is a marginal increase in price, I expect the industry EBITDA per ton levels to start improving from the next year.
All right, Mr. Kapur, then let's get straight to the point. Volumes are picking up, pricing is gaining traction as well, and demand is rock solid. And add to that the sweeteners coming in, that raw material costs are cooling off. Putting all this together, what is the EBITDA per ton guidance from here on? You warned us in Q3, you're sitting on some high cost inventory, which will hurt the profitability. And that's precisely the way it played out. You all have given a number of around 680 rupees per ton of an EBITDA per ton. But putting all this together, how much of an improvement can we see on an EBITDA per ton basis?
So I think so, I'll break this question in two parts. One is the Q4 and the next year. Next year, we should certainly see substantial improvement in the EBITDA per ton across the industry. And I can say that maybe 100 to 200 rupees one can visualize straight away. For Q4, if I come specifically to my company, while I have done away, my high-cost fuel inventory has now almost finished off, and I expect the fuel cost, which was 2.6 rupees per 1,000 kilocal, to come down to about 2.4 rupees per 1,000 kilocal. However, I am also at this point of time in the process of ramping up my new plants in Panna and Hamirpur, where my new plants are getting more, and some of the elements like waste heat are still coming up, so those things will reduce the cost post-March for us. In terms of this month, this quarter, we see an increase of maybe about 100 odd rupees as compared to last quarter. But there are substantial, investments we are making in terms of building up our brand in the new markets by spending more in terms of branding, as also optimizing the performance of the Panna and Hamirpur plants.
Okay, all right. So from around 680 for this quarter, you should head closer to around 800 rupees odd.
Yeah, I think that would be a fair estimate to give. Yeah.
And in FY24?
Price increases also matter a lot. If the price increases roll back in March, of course, the commentary then changes on that.
But give and take everything, you'll be closer to around 100 rupees higher from here, will be closer to around 800 rupees. And at some point of time in FY24, putting all that you said together, you should be heading towards that 900 to 1,000 rupees, which we were not doing too long ago. Second half of the year, first half of the year, we get to around 1,000?
I think I am optimistic even from the first half, because my new plant efficiencies are going to come in from the first half. If the fuel prices stay the way they are or get marginally down, then that is already there, and then maybe we expect a little bit of price increase in the next 15-20 days. So that should help us. I think the overall industry average should also go up by 150 to 200 rupees in the coming in the first half of next year.
Okay, so you spoke about this 14 to 15% volume growth in FY24, and you spoke about how demand is very strong. Do you have any additional capex plans over and above what you've announced? I think you have a capex of 1,160 crores that you've already put into motion to expand your capacity of 5.5 million tons. Can you tell us anything over and above that? And if yes, what would this mean for your debt profile?
So, firstly, our current capacities of 2 million tons of Panna and 2 million tons of Hamirpur are getting operationalized, and our current first objective is to get these to start getting a very high capacity utilization for these two plants. In addition, we have started our grinding unit work has already started in Ujjain, and that work is already in progress. In terms of debottlenecking, in another couple of years' time, we are expecting to come to 25 million tons. All that work is on. And I think overall, if you see, our debt should peak in the next couple of months to slightly over 4,000 crores, which would be a debt equity ratio of about 0.6, 0.65. And post that, I think we should see the debt level start reducing.
Okay, so that's from 2,800 crores currently, or 2,870 crores thereabout. You're saying the debt will rise to 4,000 crores. So do you have...
Sorry. So I know. I am talking of JK consolidated, taking care of JK Sem and JK. Our consolidated gross debt at this point of time is over 4,000 crores. I'm not talking about JK standalone.
Okay,
So Sonia is referring to the net debt, sir. The net debt number that you all have disclosed on a consolidated basis is a little under 3,000 crores.
Yeah, so that stays. That point stays. So that would peak up by another 100, 200 crores in the coming, next couple of months as everything gets capitalized in my new plants. And post that, we should see that easing down.
By how much, sir? Say in FY24, what kind of a reduction could you be looking at?
At this point of time, I would not like to give an exact number to that because I've not really worked that out. But I think we should see a reasonable amount of reduction. It also depends on what kind of an year comes in the coming.
Okay, all right. You know, I've taken your consolidated numbers and deducted the the standalone, and the EBITDA derived number is actually a loss. I think that's for your UAE operations. The UAE operations, I guess, for the past quarter was struggling a little bit. Was there any kind of one-off, and do you expect it to turn around in the coming quarter?
I'm sorry, on UAE operations, I can't comment much. What I know from my, inputs that I have is that UAE operations are doing pretty well now. So, but otherwise, I can't comment on this one-off of UAE because that is not the area of business that I look into.
Okay, I have to ask you about this proposal of cutting the GST in the cement sector from 28 to 18%. Of course, it'll be very good for volumes, I'm sure, but how much? What's your best guess? And do you think it could cap prices?
Certainly, I think moment the GST relief comes in, it goes without saying that much of benefit will straight away be passed down to the customer. And if the customer is paying less per ton of cement or per cubic meter of concrete, maybe it will encourage some more fence sitters to come in and get in for their project. Especially, I look at the lower income and middle income group people who would then be more encouraged to go in for construction of houses. But having said that, you must keep this point in mind that in an overall construction of a building, cement accounts for a very small percentage, and therefore steel and other things also matter a lot in that.
All right, we'll leave it there. Always a good conversation, Mr. Kapur. Appreciate you joining in and running us through that perspective. So that's JK Cements for you. The market's just ticked into the red. We're down about 3 points, 4 points. Market breadth is also very inconclusive. Almost 1:1 is the advanced decline. 960 up, 960. I mean, actually, exactly 1:1. I don't see that very often. We'll take a very quick break here. We've got an interesting conversation lined up with Ankit Agarwal of Sterlite Tech to discuss their third quarter numbers. And later in our special segment, Charting Trends, we'll speak with Mitesh Thakkar to decode charts, technicals, markets, and of course stocks that Mitesh would want to talk about. That's coming up after the Sterlite conversation. Stay with us.